You are tuning into the Lehigh Low Ego, High Impact Mindset podcast. I'm your host, Volkan Emre, along with a dynamic team of Kellogg School of Management alums. We are here on a shared mission to uncover the mindset that drives impact and success. On Lehigh, we have thought-provoking conversations with incredibly successful entrepreneurs, business leaders, and investors from around the globe. We uncover the mindset that drives them, allowing them to make a high impact without losing themselves to ego. Now, let's get started with today's episode. Hi from San Francisco. Today, we are with Manny Saxena, the founder and executive chairman of Mars Energy Group. Mars Energy Group is a private equity holding company that acquires renewable energy businesses and provides support after acquisition by utilizing technology, implementing systems, and driving process improvements. The main focus of Mars Energy is the solar industry. Prior to Mars Energy, Manny grew a street sweeping holding company to be the second largest street sweeping business in the US. After the significant growth and success, the street sweeping company led by Manny was sold to Warburg Pincus, a large global private equity firm. This success is captured in a Northwestern Kellogg School of Management business case, and the case is entitled Swept Up in Uncertainty at Power Sweeping. Manny is an immigrant professional and he is originally from India. He holds an engineering degree from IIT Varanasi and he received his MBA from the Kellogg School of Management. Thank you very much, Manny, for being with us today on the Lehigh Low Ego, High Impact Mindset podcast. It is really great to have you. Thank you very much for hosting me in the Bay Area today.
My pleasure. Looking forward to it.
So I have some rapid fire questions to get us warmed up. Are you ready? Okay.
Yep.
Coffee or tea?
Coffee.
Dogs or cats?
Dogs.
Mountains or beaches?
Beaches.
Text or call?
Call.
Music or podcast?
Now it's music. It used to be podcast.
Oh, okay. What changed then?
I just,
you listen too much, too many
just doing
podcasts?
too much work these days. I just want to relax and not for 1 second learn or grow and whatnot. But music right now.
It's better for relaxation. Okay. PC or Mac?
PC.
Drive or fly?
I'd say fly.
Okay. What's worse, dishes or laundry?
Dishes, because I'm an Indian and there's a lot of dishes are hard to do with a lot of curry.
Okay. So, great answer. So, what is the first app you open?
My email app.
Mm-hmm.
I mean, I bet 90% of your podcast folks answer that, if I'm not wrong.
Actually, honestly, changes.
Really?
Yeah. I think the most common so far was, I think everyone answered differently. Really. It ranges from calendar to WhatsApp to weather. Yeah, it really changes. Professor Mohan Birsani, his answers was weather.
Really?
Yeah. So maybe
I live in the Bay Area, so the weather is pretty
predictable, consistent. So Manny, can we start by learning more about your background, a brief introduction to your background and your journey to founding Mars Energy Group?
Cool. I'll be brief, and then if you want me to dig deeper, do so. So I grew up in India, engineer by background, came to the US for business school education, went to Kellogg, Northwestern, and that's where I found the wonderful world of search funds and decided to give it a few years before I jumped into it. Spent about 4 years working in both small and large companies, running teams, projects, budgets, and eventually felt ready to jump in the world of search funds, joined a private equity fund called Broad Tree Partners as an operating partner, and then got parachuted in as a CEO of a street sweeping company, where we orchestrated a mini roll-up in the street sweeping space, and which we grew to be the second largest pure play street sweeping company in the country, and eventually exiting to Warburg Pincus backed strategic in February of 2022. And then later that year, in December, I started Mars Energy Group, which is really the roll-up of solar companies, commercial solar companies. And we bought a platform company in December. And since then, we've bought two more companies in this commercial space in solar. And we're hoping to buy a fourth company in the next 2 weeks. And my role at Mars Energy is more the executive chairman instead of the CEO. So that's been my professional experience so far.
And there's really a lot to digest here. First, I would say in a short period of time, you really have done a lot of things. So, and this is really very impressive. And for our
Depends on
listening,
who you ask. My wife, if you ask my wife, I've done a lot of things, and I had to slow down a little bit. But yes, it's been a lot packed in the last 4 or 5 years.
and yeah, I understand that, and it seems that you are not slowing down. You're actually gearing up. Am I correct?
Yes, but also in a way, as you do different things and learn, different skill sets required to do the same thing again and again, you get more efficient at doing it, right? So even though I'm doing more, I am required to take less number of decisions, but more quality decisions, more so than just the quantity of decisions. So in that way, I'm not really speeding up. In some ways, I'm actually slowing down, but the outcome seems like there's a lot more because I have a lot more resources in terms of people who help me do what I do.
I think what my takeaway from that would be then you're being more selective in your decision making to have more impactful results.
Yeah, I mean, if you just zoomed out, I'm just more selective in where I spend my time. So the metric has really changed from, what role I want to take or what title I get and what people I work with to return on my time invested. So if I'm spending an hour, 2 hours doing something, is it really in the long term getting me the ROI, both, financially speaking, but also, learning, meeting with the right, meeting with people that I want to spend more time with, and then, having somewhat of a work-life balance. I have a 1-year-old now that I did not have
a lot of work
2 years ago.
A lot of work.
So the metric has really changed to return on my time invested, and I take that pretty seriously in that whatever I do, I try to, I've mentally calculated what my hourly rate is, and I usually don't like to do things which are less than that, which just helps you make decisions faster and helps you kind of constructively think about outsourcing things that you don't have to be doing.
Yeah, and stay focused. So I want to go back to the street sweeping experience. I think there are two things here for our listening audience. First, the exit that you met, the company who came in and purchased the street sweeping company that you did grow. It is a very important global private equity player. So this is a reference for our listening audience. And the second thing is, some of our listening audience members may not know what a search fund or entrepreneurship through acquisition, sometimes like these both like used simultaneously for this concept. Will it be possible to hear from you how you define search fund career path or search funds based on your own experience?
Yeah, I'll try to do that. So entrepreneurship through acquisition is, as it says, in my opinion, a fast way to entrepreneurship in some ways. But there are distinct similarities to entrepreneurship, and there are distinct dissimilarities to entrepreneurship. that was the biggest question, whether I want to do pure play or entrepreneurship, or I want to get into the world of ETA. And just to define ETA, or entrepreneurship through acquisition, or search funds, what happens is typically 30 to 40-year-old, sometimes younger, typically from business schools, go and raise a small fund, which is called the search fund, from a number of investors to basically sustain themselves, typically for 2 years or so, while they search for businesses to buy. And this also covers, including the salary, but it also covers diligence cost. It also covers flights. It also covers meals. But in those 2 years, the expectation of the investor and the entrepreneur or search funder is to be able to buy a business that they really want to run as a CEO. And when they find that business, or they get the business under what we call a letter of intent, or LOI, they go back to the same investors who have the right but not the obligation to invest in that deal that the searchers brought. And then investors typically write a bigger check that goes in as equity in this business. Typically, searchers also get a debt partner involved to buy that company. And with the debt and equity, the searcher is able to put together enough money to buy the business. And then after the business transaction is closed, the searcher typically comes on as a CEO of that business and hopefully runs the business for 3 to 7 years and gets a good return for the investors. So that's the overall concept.
And what type of company sizes are we talking about in that space? I think there's a concentration in the deals that are basically being made in that particular space, I believe. So what is your experience? What is the revenue size or profitability size of the companies that are being purchased by investors?
So typically, there's the search fund ecosystem has grown, and the spectrum has also grown with it. But typically, searchers are looking for anywhere from $1 to $5 million of EBITDA of a business, and typically between $5 and $50 million of revenue. That's the size of the business, and then there's certain other metrics they want to hit, typically to go, search and buy for one of these businesses.
So, your success with the sweeping business you purchased and then sold, it was also highlighted as a Kellogg business case. Kellogg is one of the best business schools in the world, and it is quite unusual and unique to be mentioned in a business school case, right? Can you tell us more about this success?
Yeah. So I think the biggest factor that led to the success, to be really honest, was we bought right. And I think it's underrepresented in the conversations in the search fund world, where young entrepreneurs have an urgency to just buy a company and be a CEO as soon as possible, right? I think buying right is the biggest factor, I would say, contributing to the success. And what that means is, in the street sweeping world, it's highly recurring revenue, which basically means you can predict, and there's high visibility of revenue in months to come and years to come, primarily because you have these long-standing contracts with municipalities, cities, and counties where you're sweeping streets every week for multiple years, sometimes 10, 15 years. So it really helps out in planning the debt levels because your revenue. And I could really sit here and tell you my revenue in October of 2026 today, because I can really plan the schedule of what the cities have asked for. So that was a big reason why this business attracted me. The other thing was just regulatory barriers, where in California, it's not news to people that it's highly regulated environment, especially with vehicles and big trucks. And because of the expense, because of the how expensive these trucks are, there are only a very few players who could play in that market with these municipalities. And the business we bought was already sizable, that we were able to have this advantage because there were only a handful of players in Northern California that could buy these trucks. So I think we bought right. That was the most important thing. Obviously, we made a lot of changes, both in the short term and long term. That contributed to both the short-term and the long-term value proposition of the business. The short-term was a lot simpler because obviously this came from the construction world, and for us coming in, there was a lot of lower-hanging fruits. Right, technology was a big part. I can give you an example. They did not have a fleet management system, which basically means it's a device on the truck that gets you all the information in terms of where you are, the GPS. When was the last time it was serviced by a mechanic? Whether the truck ignition is on or not, whether it's sweeping or not, what time it is. What's the speed at which the truck is moving, so on and so forth. Adding that piece of equipment was an instant hit with our customers because it allowed us to tell them where our trucks were at all times. So if a customer like Palo Alto would call and say, hey, one of our residents just called in and said, your truck hasn't come to our street for 3 weeks, you could be like, no, this is the screenshot. The truck was there 2 hours ago. So that's not really right. And so having that just improved the relationship with our customers significantly right away. Outside of that, it was mechanics basically just noted down on pieces of paper on when and what time they touched each truck for maintenance, which had an adverse effect on the trucks in terms of our maintenance and repair expenses being really high. So small things like that, where we just brought that in, improved our customer service. We had a preventive maintenance schedule where after every X number of miles, the trucks had to be oil changed or whatever the mechanic had put together in that preventive maintenance schedule. And also basically helped us get a tap on the asset utilization of the business because we knew at what time and how many trucks were running, which trucks were not running and for why. So it basically gave you a metric in terms of asset utilization. So that was a big win pretty early. The other one which we really wanted to kind of work on was our working capital. The working capital, specifically AR, in construction industry is typically very high. And we figured if we found a way to push that down, that was instant value that we could create. Yeah. So we got a software called AR Collect, and which would just send out automatic emails. We could send out sequence emails and send in a reminder to our finance folks on allowing them to call a specific customer. So we made concerted effort for us to reduce our AR. And I remember our AR used to be like $4.5 million. And in like 6 months, we were able to get it down to like $2.5-3 million, which was instant value of about $1.5-2 million.
Working capital, right?
Just through working capital, just by putting a, $200 a month software, right?
And it sounds like you and your board, you spent a lot of time on CapEx, capital expenditures, I believe probably depreciation, MRO, and it seems that like you provided like instant, as you said, instant improvements both to P&L and balance sheets, then which enabled you guys like have a very, very good exit. And I believe these are highlighted in the Kellogg case, right? Or listening audience can. I believe the title is Swept Up Uncertainty at Power Sweeping. If they Google this, they will be able to download and read the Kellogg case. And it's a very nice read. So I really recommend everyone to take a look at it, like especially people who are in the listening audience who are interested in search funds.
Yeah, no, and one thing that you highlighted, I want to make sure I cover it because you talked about capex. So capex is typically a bad or negative term in most business communities because that's not free cash flow. Money gets caught up, and that was the biggest question from my investors when we were trying to buy this business as well. And I'm a big proponent of always going deeper into each question or each hypothesis that one has during due diligence. The hypothesis in this case was obviously, hey, capex is high. But sure, capex is high. How do you look at the free cash flow metrics? The way I looked at free cash flow metric for this business was not EBITDA. It was really EBITDA minus maintenance capex, which is truly a metric of the free cash flow. And that's how I valued the business. And then, as you said, after you buy the business, there's various things you can do to improve your functioning of your business by looking at capex differently. And one thing we did was the previous owners typically had an older fleet, so they were spending a lot of money in maintenance repair. And what we did was we made a conscious effort in bringing this fleet and buying newer trucks in this fleet and selling off the old ones. So what that did was it reduced our maintenance and repair expenses. Of course, we had to put in the money to buy these trucks, which we had already anticipated and had a line of equipment already with the bank ready to go. But what that did was depreciation went up, but the maintenance repair went down. So if someone was looking at valuing our business on an EBITDA basis, our EBITDA went up because depreciation is added back. So I think that was a conscious move, even though it was not quote unquote the most efficient move from a capital standpoint, because you were sinking a lot of capital as soon as you bought the business. But it made sense from an EBITDA perspective, which would give us, when you sell your business, you sell it on a multiple of EBITDA. So I just felt like that's something that a lot of times investors and entrepreneurs move is like they just look at a business, and then if there's one or two things that are not quote unquote from the book of search funds, they typically walk, which is, in my opinion, generally right. But sometimes you just dig deep and figure out how you can use it to your advantage.
And I think, again, in our listening audience, there are a lot of business schools folks who may not have the opportunity to see the appreciation in action. So you just like gave a very good example about like why and how the appreciation actually matters, right? So obviously you did a very like good moves over there, but then when you were making these decisions, of course, like with some support of like your board members and team members as well, but I think as a CEO, you were in the driver's seat and your mindset was driving the success, like in this particular business. So could you tell us like what your mindset was while growing this business? Because I think you ended up like buying this business after and search period, and usually search periods are not easy for folks. And you came in and had an immediate impact. So what was your mindset while running this business?
Yeah, I mean, mindset kind of changes from, when you buy the business, which is pure, you start with, you're scared out of your mind because suddenly grown-up men, like hundreds of them in my case, start to look up to you for advice and leadership. And, I remember the first week you had to go sign like $200,000 checks. And whereas in my personal life, I was still trying to figure out if I'm buying organic vegetables versus not organic ones to save a couple bucks personally. So that mindset shift is pretty stark, right? From a searcher mindset to a CEO mindset. But then once you get in and you really start to play to your strengths, which in my case was people and numbers, you start to get more comfortable, right? So, and this is what I've learned coming to the U.S. I'm an immigrant here, but a lot of times you're scared about not knowing things, but you go in and you kind of make a mental block that you're not good enough because you don't know something. But in many cases, you're not supposed to know something. So you're fine to ask and fine to create relationships and fine to make an effort, fine to look stupid a little bit as you do that. And that's what I did. I wanted to be as humble going in. This was a blue collar environment. I didn't really know much about street sweeping or even, just any other people heavy businesses. And we had 2 unions, by the way, when we were running these businesses. And I just spent a lot of time with everyone, including starting from drivers through mechanics, to our managers, to a general manager, and learned enough about each of their functions to be dangerous, to be asking the right questions. Because you talked about mindset, and I think the thing that I think has made me what quote unquote materially successful in people's eyes is, I think, curiosity. I've always been very curious about learning, asking questions, and I think that's really served me well, right? So I'm not. And that's why I made the transition from being an engineer to a business person, because I'm not the guy who digs deep into one thing and knows a lot about one thing. I'm more of a guy that knows enough to be dangerous about a lot of things, which allows me to, connect the dots in ways where I think I wouldn't be able to do if I just got really deep into one thing. So I think curiosity has served me well. I don't know if you'd call it a mindset or just generally who I am. The other thing I think has helped me is just the mindset of being empathetic. And, at least I like to think of myself empathetic. My wife might have a different opinion sometimes, but just help me when I'm talking to somebody. I like to get in their world, really understand their motivations, their incentives, and, their life in general. Like to really generally understand people's personal lives, which allows me to be putting myself in their shoes, which makes me good at negotiations, makes me good at identifying talent. It makes me good at making a solid team, which is really the backbone of building any big business. So I think those two have carried me well. So I'm not the smartest in the room. I'm probably not even the most hardworking in the room, but those two things I feel like are a good combination, along with that leads to being good analytically or numbers and good with people.
Thank you very much. And I agree with you. The version that we have in our professional life can be vastly different, like in our personal lives, in the perception of our people in our family, basically. So really excellent explanation about like your mindset. Thank you very much for the details. I'm curious, what inspired you to create Mars Energy after this successful exits from the street sweeping business? Specifically, why are you now in the renewable energy space? I can guess you may say curiosity, but of all these like options like you had, why are you in the renewable energy space, and what motivated you to inspired you to create Mars Energy?
Yeah. So we had closed the transaction in February of 2022, the sweeping transaction, and I had to spend some time with the buyer to make sure the integration went right for them. But that gave me good time to start like really think about what I wanted to do next. I am still relatively young, even though my body sometimes tells me the other way, and with all the joint pains and whatnot I have. But I just wanted to, do something that was that had 2 things. One was something that was highly scalable, right? I just love the aspect of building and growing. I just love that rush. I like the process. I'm obviously like the destination, but I'm not in it for the destination. I just love the process of growing and building things. So I wanted to do something that I could grow and scale fast. The other thing I wanted to do was, the second thing was mostly around something that just did some good in the world, really. And I didn't, by no means did I want to go save baby whales in the ocean. I'm sure that's a noble path as well, but that was not my goal. But in the realm of buying and selling businesses, for example, I didn't want to go buy debt collection companies, for example. And no offense against people who do that. Some of our friends have debt collection companies, but that was not the goal. So I went on with these two broad criteria. And the reason I went with these two broad criteria was because that encapsulated things that I was good at, which is search funds, buying and selling companies and growing small companies and making relationships with folks in these companies. So things I'm good at doing, things I like to do, things that's good for the society, and then things I can create value both financially and for the other stakeholders involved. So it was a good combination of those four things, which, basically got me thinking about the renewable sector. And I remember when I started thinking about this, I also spoke to a few of my friends in the search fund community. Renewable is not the most hot industry in the search fund world for obvious reasons, regulatory risk, project-based revenue and whatnot. But back to my earlier points about getting a little bit deeper into each of those hypotheses was immensely helpful in me trying to be like, yeah, sure, these are the issues, but it's also growing at 15% a year, right? There's macro tailwinds like electricity prices are going up double digit across the U.S. In Northern California, we've had 20% plus increases in electricity prices. We're paying 40 cents a kilowatt hour, whereas the average in the U.S. is, 11 or 12 cents a kilowatt hour. The usage of electricity is obviously going up significantly, with California mandating electric cars by 2035, all cars sold will be electric cars. And also the price of electricity generated by solar has been going down significantly to a point where for the first time in history, solar is cheaper than any other source of electricity of generation, unsubsidized. Outside of this, there was a lot of macro things that were going on. So within the Inflation Reduction Act, the subsidies actually went up for the next 10 years. We got a 30% dollar for dollar reduction in taxes if you invested in solar. And within that, I found out that there was a gap in the market within 50 kilowatt through 5 megawatt range. So there was a lot of successful residential solar companies, which we didn't want to be part of because it was highly competitive, low barriers to entry. And then there was a lot of larger companies that were doing utility scale, like 100 megawatt plants, which had its own sets of challenges. But this whole CNI space in the middle, in my research, was kind of left vacant.
Yeah.
And that's what I'm really trying to grow with this.
And possibly, I recently looked for like the company that I'm leading right now. I looked at that space, and not only just like the size you mentioned, but also I think there are also regional opportunities. For example, my company is based in Georgia, and it's really almost like an untapped like territory, like when it comes to solar and when it comes to the size that you just like mentioned. So I think I really am not a subject matter expert in this field at all, but I can also see from the scalability perspective, you can also bring your success to other states like here in the US.
Yeah, I mean, the penetration of solar in the US is still about 5%, right? In California, that's more than 20%, 25% almost. And in bigger states like Texas, it's like 1%. And that just gives you a perspective of how big the market is. And then if you look at the recent years of new power generation capacity added in the US, between solar and wind, that's about 90% of new generation capacity added. So if you just look at all these data points, market looks to be going in that direction a lot more, and there's a lot more areas to grow. So that's what we're trying to do at Mars Energy. We bought our first company in Northern California, went after the farmers space because there's a unique tailwind even within solar, within the farmer segment. We can talk more about that if needed. and bought two more companies in nonprofit space. One of the company in new construction space in California. It's mandated for you to have solar on every new construction. But the next step, to your point, is really diversifying away from California. So the next two companies we're looking at, one's in Kansas, one's in Florida, and I think a goal is to get to the next California, at least in the trajectory standpoint.
Yeah. Thank you very much. This was an excellent answer for why you are, what inspired you to create Mars Energy, and why specifically the renewable energy space. So let's talk about Kellogg. Born and raised in India, and you came to the US for Kellogg, right? What is the Kellogg impact? How would you define the Kellogg impact on your professional and personal life?
Yeah, I think Kellogg has a very special place in my heart, and that's why I love to be associated with Kellogg as much as possible. I mean, it really starts from the time when I was interviewing for business schools, and I lived in India, but I made the effort to somehow save up all my money to come to the US to interview in person. So I went to all the schools in Chicago on the East Coast, and then also on the West Coast. And I have a very special story. When I came to Kellogg, after the interview and everything, interview had gone fine. But then I was just sitting around and, getting lunch. And then there were two people who I just started talking with, and they just decided to show me around the campus. They obviously had nothing in it. They obviously didn't have any incentive to show me around, spend more time with me. They probably had classes to go to, but that's the spirit that really encapsulates Kellogg's spirit, which is to just help, which is to be team oriented, which is to be just good people, good well-rounded people, and that stuck in my mind. So when I had some options to go choose the school I wanted to go to, and so Kellogg was really up there, and it was not at all a disappointment in any way. I feel like somebody coming from a different country, as I'm sure you can attest, there's a lot of challenges you go through, and already being jumping into a pretty fast-paced environment, which business school is, where I remember we joined in September, and October we had to start coffee chats with big companies and convince them to give you interviews and whatnot. You'd want a softer landing, right? And I felt like Kellogg was a softer landing for me, with the type of people I met there, who brought me under their wing. A lot of times I'm sitting in conversations where I wouldn't really understand the topic of the conversation, let alone what they're talking about, right? Whether this was music or sports or childhood memories they were talking about, I could not understand the accent. I could not understand the colloquial way things were said here. But having friends who were patient enough to explain to you different things about their background, about how things are said, and what's culturally important, football, for example, things of that nature, really allowed me to get out of my shell, which I may not have had at other schools. The other thing that's pretty well cemented in Kellogg students' minds is just the idea of teamwork. So you're to a point forced in every class. I think you have a team assignment, which was great for somebody like me, international, who had never worked with anybody who was not Indian in a work setting. So that allowed me to simulate that, at Kellogg. That's really held me in good stead since then. And I feel like it also gives you a nice, well-rounded experience in, not just specifically finance, marketing, or accounting or whatnot. It gives you a well-rounded education experience as you work on your EQ, which is more important in my mind than IQ. So I think those were some of the things that professionally helped me. And obviously I have lifelong friends. I went to their wedding, they came to my wedding, and we continue to stay in touch, still travel with them. And that obviously you can't ignore, even though it's not professional, just enriches your life, which makes your professional life better. Kellogg has a special place in my heart.
I want to talk about being an immigrant professional, and actually being an exceptional immigrant professional, because as an engineer, immigrant professional from India, you had a very untraditional career path in the US, and you took like way more risks than an average immigrant, right? You're from IIT, the best engineering school concept in India, right? And the trajectory, I will say, if there is one, is not ending up in search funds. There's a lot of ambiguity in your story and a lot of risks that you took. Why are you on this path?
So I think I look at life in a very like an 80-20 rule, the Pareto principle, where the 20% of things you do really gets you 80% of the things you actually get in life. So I feel like risk is the same way, right? Where you might classify that as me having taken a bunch of risk. But in my mind, I didn't take as many risks if you really think about it, right? I had a good engineering degree. I had a good business school degree. So if I went and if I just sat down and tried to follow my dreams, I always had something to fall back on. I'll always get a job at some large Fortune 500 company at some level was my confidence, which is much different from, let's say, somebody who's going in undergrad and drops out of undergrad to start a company. And then even within entrepreneurship, I think entrepreneurship through acquisition is a lesser risky path, because what you do is you have a salary for 2 years that you search with, and then you have a shot to buying a company. So I think it was pretty risk adjusted. It was unconventional, sure, but I think it was not as risky as one might think, because you're looking at it from a different lens, right? Whereas I was looking at it from a different lens altogether. And then I just feel like I had nothing to lose. I was making $20,000 a year before coming to the US, right? So, and I was pretty happy doing that back in India. So what was the worst that could have come from me trying something that I really, really wanted to do? I did spend a lot of time in understanding each of these paths, right? For me, it was the biggest disservice you could do is you can just jump in something, do something because it's cool or hip, and then really not, you don't fit well in it, or you don't feel mentally happy in it. So for me, entrepreneurship is what I wanted to do at some point in life, but search fund was just a path to get me all the things I would get from entrepreneurship, which was really, when I dug deep, was working with people, creating a vision, getting people excited about that vision, and winning every day, problem solving, things of that nature. And the things that I didn't like about entrepreneurship, which was, fundraising or, product market fit and, building a product, those things were not in search funds. So for me, search fund was a perfect version of entrepreneurship. And so I didn't think of this as a bigger risk. It always felt pretty natural. And, for that, I spoke to multiple people to make sure, I was kind of trying to emulate my life when I would do a search fund. And when I did it, eventually it felt right. Right. And it's felt right since. And I consider myself really lucky to be doing that day in and day out.
I think there's one word that you used in your answer, which is having a different lens. I think, this is my personal opinion, I think that you had a different lens, indeed. As an immigrant professional, like also myself, I can definitely say that, and which is really great. And what advice would you give for entrepreneurs and searchers, as an investor, as a successful investor, operator? What would be your advice for them?
So, just picking up from my last answer, I think the advice I would give in searchers and entrepreneurs is just do it for the right reasons, right? It's very easy to get, especially business school students and folks who are on LinkedIn too long, seeing what other people are doing and are successful at it. It's easier to be in that mindset of, hey, let me just do this because this seems like a good idea to do. at least as the next step. I would just challenge that, and I would just make sure that you spend as much time making that decision, because you'll be spending a lot more time doing that, or trying to make sure that decision was right after you've taken the decision. So I was, when I was trying to search, I made it a point where I remember I had an Excel sheet, talked to all kinds of searchers that they're out there, people who have joined private equity, people who have done a traditional search, people who have done a self-funded search, and then talk to all the stakeholders involved, which was successful searchers, unsuccessful searchers, investors, service providers, and really, try to create a vision in my mind on what I'd be doing, when and if I ran a business, almost seeing myself on that table that I saw on a desk that I saw another entrepreneur, and simulating or thinking hard about what decision I would make when a problem that was similar would be thrown at me. And that really, I just felt excited and energized to be making those decisions, to be problem solving on a day-to-day basis. The variety of decisions that you have to make, or problems you have to solve for, are pretty immense as a CEO of a small company, right? Starting from fundraise through, CapEx strategy to the board decisions, hiring, firing of employees. You do all of it, right? As a CEO of a small business, you're not a functional head. You're generalist, as general as they come. So I just love that aspect, and it's not for everyone, right?
I want to allow me to add one thing. You really deal with a lot of people problems, right? It's like when you are actually running a small or mid-sized business, like in that particular space, like people need to be, in my opinion, be prepared, like to deal with a lot of all kind of like people problems. I'm sure you have seen probably the worst.
Yeah, no, I mean, we had almost 200 drivers. We had 2 unions, blue-collared employee base. We're running a massive truck, which is, $250,000, $300,000 truck. Yeah, so saw a lot of that. And that's why in the beginning, somewhere I said that, EQ is more important than IQ, right? It's really not, you don't have to be a rocket scientist to run a business. You just need to understand people a little bit and numbers and finance a little bit, right? So think about all those things in your life before you jump into the world, because, you just think that title is cool, or you'll make a lot of money doing. There are other places where you could probably make more money, maybe even much faster. So that'd be my recommendation to people considering the world of search funds.
Manny, thank you very much for being with us today. It was really a wonderful conversation. Thank you very much.
My pleasure. Thank you so much for having me.
Thank you for diving deep with us on another episode of Lehigh, Low Ego, High Impact Mindset. Join us every week as we discover the stories, strategies, and insights that will empower you to grow personally and professionally. Stay inspired and catch you in the next one.